The warning signs are no longer whispers. They are loud, visible, undeniable. Across Jamaica, from Kingston to Montego Bay, from Spanish Town to rural parishes, something is shifting. Office lights are going dark. Factory floors are silent. Tourist beaches are quieter than ever. This isn't just a slow economy. This could be the beginning of a structural economic crisis. And now, 10 major companies are scaling back, shutting down, or pulling out operations across Jamaica. What does this mean for jobs, food security, banking access, tourism, and the future of the island? Let's break it down. Number 1. Telecom shock. Digicel's retail and job cuts. Digicel, one of the Caribbean's telecom giants, is reducing its physical presence in Jamaica. The company announced it will close approximately 30% of its retail stores and consolidate customer service operations, shifting some roles overseas. This means fewer local storefronts, reduced in-person service, hundreds of potential job losses. For many communities, especially outside major cities, this reduces access and employment opportunities in one of Jamaica's most visible industries. Number 2. Manufacturing under pressure. Grace Kennedy and Jamaica Flour Mills. Grace Kennedy has halted selected non-core manufacturing lines, citing rising energy and shipping costs. But the more alarming shift? Jamaica Flour Mills ceasing operations at its main plant. For decades, locally milled flour supported bakeries, restaurants, supermarkets, thousands of jobs. Now, Jamaica is moving toward full flour importation. This means increased dependence on global supply chains, exposure to shipping delays and international price spikes, greater vulnerability to global disruptions. Food sovereignty is no longer guaranteed. And when a country imports essentials it once produced, it becomes economically exposed. Number 3. Banking goes digital, but at what cost? Scotiabank Jamaica is closing 15 physical branches. The shift toward digital banking may increase efficiency, but what about elderly customers? Rural parishes? Small business owners without stable internet access? Reduced physical banking can mean reduced financial inclusion. Meanwhile, National Commercial Bank, NCB, is shutting down certain offshore financial services operations due to international regulatory pressure and de-risking challenges. This signals tightening global financial constraints on Jamaica's banking sector. Number 4. Consumer industry retrenchment. Wray and Nephew, beverage production cuts. Major beverage producers are scaling back underperforming product lines. Factories that once ran full capacity are now streamlined, focusing only on top-selling products. This is a defensive strategy: cut losses, reduce overhead, focus on profitability. But it also means reduced production diversity, fewer factory jobs, shrinking industrial activity. Number 5. Energy sector freeze. JPS renewable pause. Jamaica Public Service, JPS, has frozen new renewable energy investments. At a time when global energy markets remain volatile, this raises concerns about energy independence, long-term grid resilience, sustainable growth. High energy costs remain one of the biggest pressures on Jamaican businesses. And without affordable power, manufacturing struggles. Number 6. Tourism crisis, resort closures. One of the most devastating developments is in tourism. Bosco Bell Beach Resort has permanently closed its doors. This follows a significant decline in tourist arrivals from key international markets. Negative travel advisories and global economic uncertainty have contributed to lower bookings, empty hotel rooms, reduced airport traffic, Tourism isn't just hotels. It supports taxi drivers, craft vendors, tour operators, musicians, small restaurants. When tourism falls, entire communities feel it. Number 7. Pharmaceutical and agricultural retreat. Lasco manufacturing is shifting some pharmaceutical and personal care production toward imports. Jamaica Producers, JP, is abandoning several local farms due to high production costs and lost export competitiveness. This means less domestic production, increased reliance on imports, reduced rural employment. Food and medicine, two critical sectors, are becoming more externally dependent. What does this really mean? This isn't just about individual companies. It's about patterns. When telecom shrinks, when banks close branches, when flour mills shut down, when farms are abandoned, when tourism collapses, that's not a coincidence. That's systemic contraction. We're witnessing energy strain, banking restriction, food import dependence, tourism vulnerability, manufacturing retreat. Each closure alone is manageable, but together, they form a warning signal. Is this economic collapse? Not yet. But it is a critical stress point. If policy adjustments, investment confidence, and sector stabilization don't occur, Jamaica risks higher unemployment, increased import dependency, rising food prices, greater reliance on remittances, slower GDP growth. Economic collapse doesn't happen overnight. It happens in stages. And early warning signs matter. Why you must pay attention. Behind every statistic is a family. Behind every closed gate is a worker. Behind every empty storefront is a dream deferred. This moment requires awareness, not panic. Solutions require informed citizens. Conclusion. If you care about Jamaica's future, share this report. Discuss it with your family. Stay informed. Hold leadership accountable. Subscribe now for continued analysis on Jamaica's economy, Caribbean business trends, tourism updates, financial sector developments. Because information is power. And in times of economic uncertainty, staying informed is survival. If you enjoyed this video, don't forget to like, subscribe, and hit the bell icon for more upcoming videos.